How are you, folks? Enzo DiCostanzo, clinical professor, economics and finance in St. Peters, New Jersey City. And today we're going to be working on assignment number 7, and we're going to go through, we're going to be going through all of that. Sorry, we're going to be going through all of that today. So let's get right to it. I updated the Blackboard site. I'm not going to say updated, but just sort of polished it a bit. Let's share. And like I said, folks, these assignments are going to drop off, so you got to get them done, by the due date or these things. So the only ones that are left are assignments 6 and 7. Okay, those are due about a week from Monday or so. You have a couple days grace period, but it's going to click off, very soon. Maybe not the 18th, or maybe the 19th or so or something. But again, you want to get that stuff, done. So we're looking here. This is assignment 6 is that 250,000. So you have the 3 versions of that, and the Schedule A, that's just for your own learning, kind of a thing. But you're gonna have your own knowledge of what's going on. But you're gonna do standard deduction, itemized deductions, and no deductions. And there's a couple definitions, the difference between tax deduction, tax credits, and that kind of a thing. And this is 1, 2, and 3 are just some of the questions, and then 4 is the computation. Then you got to put it together in the manner that we've been advising you guys to put things together. And some of you, I think there's a couple of people who've worked and came back to school, I think, and you can tell because they do just cover page. Everything's identified the appropriate way. Okay, so assignment number 7. So here we go. Assignment number 7 is the audit assignment, and there's 2 documents here. There's the Home Depot document. All right, this is the Home Depot 10K. Now, again, I didn't do a formal definition of this. This is basically the annual report, and this is filed with the Securities and Exchange Commission, and this satisfies the Securities and Exchange Act of 1934. In other words, you got to describe the company, who's running it, the balance sheet of the company, the cash flows of the company, the most recent, the couple years of financial performance, what some of the risks are. And now it's being added on a bit where to satisfy Sarbanes-Oxley, the chief financial officer has to sign off and say, these are the numbers as to the best of our knowledge, and I'm personally liable and responsible if these aren't the numbers of the company, or these don't accurately represent the financial state and the financial position, the financial performance of the company. The auditors have to sign off on it, and there's a very distinctive difference. And we'll look at the which is the point of this exercise. We'll look at the 2 letters, the 2 audit letters, or the 2 accounting letters. They're only about a page or 2 long. The whole document is 85 pages, which is really not that bad. If you look at J.P. Morgan's annual report and some of the Bank of America, those are like 300 pages, or 250, 300, because they're very complicated from a financial sophistication perspective. Okay, but Home Depot, they have plywood and pipes and lawn mowers and gasoline canisters and hammers and tools and drill bits and all that kind of thing. They've got an inventory and all that kind of thing. Sinks for the kitchen, sinks for the bathroom. It says what the address of the company is, and it says how far. It says for the fiscal year ending January 30th. So the retailers end that 1 month into the next year. So it's still 12 months, but it's just shifted. It's not January to January. It's it's not January to December. It's February 1st to the end of the next January. So you get that month spill over into the next year, but it's still 12 months. They just take out the January from 2021. And some of them say they call this the 2022 annual report, but I think that the best way to call it this is the 2021, because 11 out of the 12 months are 2021 performance. We have a Home Depot right where I live, and I was surprised. Remember, I think I asked you guys in class how many people work for Home Depot, and it was a big number, right? It's like 500,000 associates or something to that. Now it says associates. It didn't say management staff, or it didn't say any of those other things, which I thought was a little deceptive. I mean, how big can that staff be? I don't know. And I think they talked about salaried workers somewhere in the first 10 pages. I think the workforce number is here. Here, it's on PDF page 10. and it says most of them are in the United States. And then, so there's 42,000 salaried employees, and I'm assuming that's the work staff. So they only list. Okay, no, this is within. Okay, this 42,000 is within the 490. So it's about 450,000 people, patrolling the stores, and then the rest of it is probably down in Georgia. And I'm sure it's a very beautiful place to work down there. So as you get, like I said, believe me, I've taught entire annual reports that take many videos. So we're not going through this piece by piece or item by item. But no, a 100-page report is not that bad. Now, one of the main questions that now we're going to go over these topics here, but one of the main, and I just wanted to point this out in the first video, one of the main questions that you're after, see what it says report of independent registered public accounting firm, you've got to find those two letters. Someone said, oh, I looked in the table of contents or something like that. So you got to be careful with that. What I did, and learning from my value line days, I highlighted this, right? I highlighted the phrase that I was looking for, and then I went to the search function in my PDF software, and surprise, surprise, here's page 71 has one of them, 73 has a note, and it's searching down here. 73, it says no matches. So yeah, so I think there's 3 of them. There's 1, 2, 3. That's it. So 2. So the other one is just a reference to these letters. So this is PDF 39, and I think I put it right. Yeah, 39. Yeah, 39 and 71. So PDF 39 and PDF 71. Okay. So again, if you just search those, right, you're going to be able to find what you're looking for. Now you have to be careful with this. It's unfortunate. This is PDF 39, but look at the page number here. This is 35. So the paper page and the PDF page may not always match. And these things are only about a page. Okay. Now we're going to go through sort of the theoretical version of this. Now, again, you guys saw federal tax regulations. You saw federal tax lecture this particular semester. And we're going to do we have an audit assignment here. That's now certainly not exhaustively going over, but for the CPA exam, that's 2 of the 4 sections. And the other section is business environment, which is some economic stuff, and then financial accounting, which is income statements and balance sheets. We didn't do too much in our class, but you have some sense of what the CPA exam would ask you to do. I'm lucky in the sense where when you work in private equity, all that stuff, I'm not saying it's unimportant, but my background as an academic is what the people I work with want. All that we can hire CPAs, we can hire all these, but as long as I can explain the model, I'm really the model guy. So my background is enough for what I'm doing, and I'm trusted, and all those other kinds of things. So you want to work on that, and that's very important. So 39 and then 71 is the other page. So one of these is for internal control, the other one is for financial statements. All right. Now it's not just okay. Well, we agree that these financial statements describe comprehensive income, stockholders' equity, and cash flow, and balance sheets and income statements, and all these other things. It's not that we agree, but we agree with the process that you use to control your company. That always all those people coming to the register and buying bleach and buying hammers and buying Milwaukee drills and all these other kinds of things. That you're recording that stuff accurately, and the people aren't stealing employees or the public or some combination, or there's some I'm sure we all love the romantic Italian movies about organized crime that in my opinion romanticize it far too much. And I think it was Goodfellas, which was a movie that came out about 30 something years ago with Joe Pesci and De Niro and Paul Sorvino and some of those guys, and it was about the Brooklyn and Queens organized crime, and they were it was the airport, and they knew the security guard and gave them the key to get in, and who the night watchmen were. Now, if you have that kind of breakdown in security at a big firm, there could be all sorts of lumber. I mean, there could be another company running in parallel, a sort of a dark water company or dark money company, and the legitimate company operating right next to one another. And that's what internal control is supposed to, prevent from getting started and or stopping it when it, if and when it does get started at a very early stage. And usually there's some sort of law enforcement, not just attorneys, but some sort of law enforcement background, retired FBI guys or retired sheriff's officers that work for these big firms that are in charge of figuring out, if there's some sort of problem, internal to the company before just calling, the Atlanta, police precinct that you're near, that's all worked out. These companies like to keep all this stuff internal, because if that news gets out, it can affect stock prices, affect compensation, affect a whole lot of things. So you got to be very careful when those kinds of things sort of go on. Nope, not that one. I want to be careful that we're not I want to be careful, what we're doing here. So, and the firm wants to be careful too. So yeah, so that's how you find this. That's where the pages are. Whoop, there we go. All right, so you highlight report of and don't highlight the little quotes. Try to just use the arrow keys, right, and then say shift left arrow and stop. Just don't include the quote, because the report doesn't have the quotes, and you copy and paste it in that particular matter. Okay, like I said, this was due 14th with the extension to the 18th. 4 or 5 pages. So we're going to go over, just sort of as a lecture, audit and some of the material that you need for these questions. So I'm anticipating about 3 1-hour or so lectures. So you have audit and the types of audit and all that stuff, but we're going to get to that. So the first 5, 6, the first 7 are just sort of theoretical. Yeah, the first like 6 or 7 are sort of theoretical questions. 8 is studying the Home Depot report, and then 9 is just getting it together. Yeah. 9 is another that's another 10K question. And then 10 is just create the PDF, create the cover page. So you should have all that. Okay. Now, again, obviously this has the answers here. And also, just to maybe do this at the beginning of one of these videos, just very quickly before we hit the lecture material, you want to look in your folder here, and you want to find your template. So this is assignment 7. Okay, whatever, fall 2022, something like that. You want to put the appropriate date, the appropriate course identification, all that. And again, you don't need any of this other stuff here. This is all just do this. And we could say file, save as. And this is assignment 7, cover page, PDF. All that. And the due date, November 14, 2022, something like that. And here we don't need, well, I'm going to leave just for, you should never do PDF like that, because obviously it's a PDF file, but I'm doing it just to keep it straight. So as we're working on this, we can sort of deal with that. So yeah, see, there's your assignment, your first lesson. And then what you want to do is you want to pick up your questions. And actually what I'm going to quickly do, so I don't have to delete all the answers, we're going to grab your version. And you can take this off the PDF also. You just want to take all your questions like this, right? Just take all your questions, copy. You want to tab over here. You want to paste. Okay. And actually, even what you could do with this, we'll do Times New Roman. We'll do 12. And then we'll expand some of this other stuff. These are all 12. Okay. And then here, this is just going to make this smaller, make that bigger, fold it out. This stuff can be smaller. That could be like a 14 or so or something like that. Something like that. Okay, where it's not overstating things. And then now here you have your questions, and just, give it some. And notice I went back and underlined and highlighted a little bit. That's I posted like a fresh version of this. And you never want to break a question across too many pages if you can avoid it. So you can see 9, 10. Okay. And then you do your work. And then even in here, you want to put a little space in there. Okay, so you can just say, and then you now for this one, you don't have to go bananas with the Excel and all those other kinds of things. You can just PDF it from here. Just hit the PDF button, and that's it. Okay, so there's nothing really more to it than that. And this was obviously the file without the answer. So yeah, so what we're going to go over today is what's here, what an audit is. Now, certainly, you guys know me how you know me. I could spend a lot of time on each of these. I could go probably a half an hour on each of these topics, and there's 7 of them, so that'd be a 6-hour video. So, which I don't know if I don't know if any of us would really appreciate that, right now, because you don't need it exhaustively. I'm just making you aware of what an auditor's opinion is, what an auditor's report is, what an audit is, what generally accepted auditing standards are, what an auditing standard board is, what internal controls are. Now, there's no direct questions for the last 3, but these are just important topics that I just wanted to throw in there. Okay. All right. So now your first question. And this is going to relate to question number 1, is define an audit, right? That's a few sentences of what an audit is. An audit refers to a financial statement audit. It's an objective examination, and really, what is it? It's an objective examination and evaluation, right, of the financial statements of an organization. Make sure that the records are fair, accurate, and they represent the transactions they claim to represent. So if you sold X amount of plywood, you sold X amount of lawnmowers, you sold X amount of trees, because Home Depot sells plants too, that it's accurate, that's to the best of human capability and the accounting firm's capability to discern it, that this is what exactly happened here. The audit can be conducted internally by an outside firm, or if the IRS does it, that's not, you certainly don't want to hear that. But so external, internal audits are good. IRS audit bad. Okay, so we don't want that. But that's it. That's what I mean by a couple sentences. So it's just that little piece. So now we'll look at some of the what an internal audit is, what an external audit is, what an IRS audit is. External audits are commonly performed by certified public accounting firms and result in an auditor's opinion, which is included and now in the audit report. Now I remember we had an internal audit at the former version of the private equity firm that I worked for, and it was a complete joke. The president running the firm was only getting an accounting firm in, and it was a firm that he had a relationship with, and he was just trying to. He was thinking a bunch of steps ahead if there was ever some sort of serious problem. They said, well, I tried to audit it, and the treasurer didn't cooperate, or this person, and it was really just a big setup for everyone who worked there to say, oh, well, I tried to audit it, what we were doing, and the people who worked here didn't cooperate, or we didn't keep good records, or those kinds of things. Okay, and that's shady people do things of that nature. Okay, but so that's an internal audit is that. And I'm saying an internal, and then an external one is where you sort of completely. Now it was sort of the one I was describing was a combination of external and internal. We brought in accountants, which is really an external audit, but it was in conjunction with me doing it, but he wasn't cooperating with the data. So what was I supposed to do? Fight the guy in the hallway, say, hey, give me this, give me that. It was people purposely trying to hide what was going on, which is never good. And it's important to see those kinds of things, and it's important to, I'm not saying survive it, but it's important to make sure that you don't get caught in the jet wash of something like that, because people who are thinking that all those moves ahead are trying to be devious, and that was the biggest red flag that I saw. I said to myself, this is no longer for me, doing all this. So now the second, and we'll go through. So external is performed by a CPA firm and results in an opinion. And I would, if I was those accountants, I would just say that here, what's the choice? There's a fourth. I give a disclaimer saying I wasn't given enough information to even make come to a conclusion or come to a professional opinion. It's what's going on here. And now there's a couple versions of there's 4 versions of opinions. And there's a report that we're going to talk about, the audit report. And really, so you're seeing. Now, certainly the report that KPMG gives Home Depot is extensive. God knows how many pages it is. Trump's tax returns were 400, either 400 or 4,000 pages. I forget. His numbers, Trump has a lot of trouble with numbers, I think. Let's see. Trump's tax return. Yeah, there's big long drama online about this stuff. I thought it was 400 pages, and then the endless investigations into this and that and all that kind of thing. It says how long are trucks? I don't think it's four. I think it's 400. I don't think it's 4,000. But I knew. And then he was talking about the price of a plane. He was in Pennsylvania tonight. They were talking about, and I think he jumbled that up. And I was, well, I see he's getting older too. He said a couple million or a couple billion or this or that. Or it was all over the place. Okay, it's billion. I thought I didn't think it was million. Yeah, he said million and billion and 200 million. It was 5.7. He was going. So it's a $4 billion aircraft. Okay, I thought that's what it was. So he was jumbling up the numbers himself and confused me tonight. So anyway, I was listening before I got on with you guys. Anyhow, so yeah, so there's auditor's opinion, auditor's report. And then it says there's unqualified, clean audit opinion means the auditor has not identified any material misstatements or of his or her review of the financial statements. That's what you want. You want the unqualified, the clean opinion is really what you're looking for. Right? You're looking for that. Okay. There's external audits here, include a review of both financial statements and a company's internal controls. Internal audits serve as a managerial tool to make improvements to processes and internal control. So yeah, we were attempting an internal audit, but when the person running the firm is inherently trying to cover up what's going on, and like I said, I don't know what happened, and I'm happy not to know at this point because I just don't want to know. It's not one of those things that you care to really see what the conclusion is, because it's not good. So anyhow. So external audits include reviews of financial statements and internal controls. Internal audit serves as a managerial tool. That's managerial accounting to make improvements to the process. And that's people who are in good faith are doing it, kind of a thing. So there you go. So that's what it is. Basically, what an audit is, it's an objective examination, evaluation of the financial statements of an organization to make sure the records are fair and accurate, and they claim to represent what they intend to represent. And there's some other stuff here. It says all companies receive a yearly audit of their financial statements, income statement. So, and this is the list of statements that are audited, and there's more to it, but at least income statement, at least balance sheet, at least cash flow statement. Lenders look at this stuff as a part of debt covenants and agreements, and some companies' audits are legal requirements due to compelling incentives to intentionally misstate financial information and attempt to commit fraud. So, as Sarbanes-Oxley, publicly traded companies must receive an evaluation of the effectiveness of the control. So, it's not just examining the financial statements; you're also examining the internal controls of the company. Okay, and that's why we have that internal control definition. Like I said, I'm going to try to get through those 7 or 8 topics, and then the next video we'll do like the questions, and then the third video we'll work on the Home Depot letters. Standards for external audits performed in the United States are called the Generally Accepted Audit Standards. They're set up at the Auditing Standards Board, and you can capitalize this if you wish. Of the American Institute for Certified. So there's a lot. American Institute for Certified Public Accountants, Auditing Standards Board, generally accepted auditing standards. Welcome to accounting. There's a lot of these. Public Accounting Oversight Board is another one. Sarbanes-Oxley. So we have 1, 2, 3, 4. What are these acronyms? 5 of them. 5 acronyms, right? Yeah, we have 5 acronyms. What was this? Not this thing. Whatever. So anyhow, but there you go. And then you have something else here: International Accounting and Auditing and Assurance Standards Board. You have that. You have International Standards on Accounting, on Auditing rather. So a lot of acronyms, a lot. This is what an external audit is by an outside firm. and can be helpful in removing any bias and reviewing the state of the company's financials. Financial audits seek to identify if there's any material misstatements in the financial statements. An unqualified or clean opinion provides financial statement users with confidence that the financials are both accurate and complete. External audits therefore allow stakeholders to make better, more informed decisions related to the company being audited. Okay. External auditors follow a set of standards different from that of the company or organization, hiring them to do the work. The difference between internal and external audits is the concept of independence. So we didn't have that at all. We were going through the one that the firm I worked for, and I'm not talking about Value Line had its own problems, to be honest with you, and I'm not going to go into those. You could just look up Value Line and Gene Butner, and you can see what they did. All right, so a lot of the places I've worked at, there's been issues. Okay, there's been issues. When audits are performed by third parties, the results of the audited opinion expressed on items being audited can be candid and honest without affecting the daily work relations of the company. Well, that none of that's fairy tale. Okay, that's all fairy tale. So company's financials, internal controls, system. All right, so this is really what's being audited and studied. Okay, an internal audit are employed by the company. So this is external. We looked at that. Internal are employed by the company or for whom they are performing an audit, and the resulting audit report is given directly to management and the board of directors. Consultant auditors, while not employed internally, use the standards of the company they're auditing as opposed to a separate set of standards. Okay, so the external version is attempting to dispassionately look at what's going on. The internal version is supposed to be sort of a friendlier, you're helping management as opposed to sort of criticizing them. These types of auditors are used when the organization doesn't have the in-house resources to audit certain parts of their own operations. The results of internal audit used to make managerial changes and improvements to the internal controls. The purpose of an internal audit is to ensure compliance with laws and regulations to help maintain accurate, timely financial reporting and data collection. It also provides benefit to management by identifying flaws in internal control or financial reporting prior to the review by an external auditor. Yeah, so the internal version is before, and again, I worked for a private company, so we didn't necessarily have to worry. We didn't have to provide a letter that some accounting firm looked at what we were doing. So the internal external was sort of combined for private firms. But again, and operating in good faith and things of that. There's banks and overseas that we're working with that do have an annual report that would easily stand up for a public company if the company was a public company, even though it's not, even though it's a privately held company. The Internal Revenue Service performs audits. So you're in the third version now, where it's people with police powers. When people with police powers are auditing you and it's a federal agency, that's trouble. They are routinely performed audits to verify the accuracy of a taxpayer's returns in specific transactions. When the IRS audits a person or a company, it usually carries a negative connotation and seen as evidence of some type of wrongdoing by the taxpayer. But being selected for an audit is not necessarily indicative of any wrongdoing. Yeah, right. Okay, so yeah. The IRS selection is made by random statistical formulation. I don't believe that for one second. There's three outcomes: no change to the tax return, a change that's accepted by the taxpayer, a change that the taxpayer disagrees with. So those are sort of the three possible IRS outcomes. If the change is accepted, the taxpayer owes additional penalties. If the taxpayer disagrees, there's a process, there's a mediation process. And then if otherwise, it goes to court. And we discussed a lot of that at the beginning of the tax court. We discussed that at the beginning of the course. But that's an audit. It's like I said, I went a little further, and actually internal, external might be the answer to something else, right? I think perhaps. Yeah, types of audits. So we went over 1 and 2. So you have the lecture for 1 and 2. Now the types of audit, and again, I went bananas here, but a few lines is fine. You don't have to redo the lecture. Right? IRS audit, internal audit, external audit. So 1 and 2 we've covered, and now we're going to go over the opinions, which are next. And we already saw the first one, which is the unqualified or the clean opinion. We already looked at that. So an auditor's opinion is a certification. Now, again, a certification is you're signing a legal document that says what I'm saying is true. I know it to be true, and I'm verifying that under penalty of perjury or under adverse legal consequence that what I'm saying is accurate. Is a certification that accompanies financial statements. It's based on order of the procedures and records used to produce the statements and delivers an opinion as to whether material misstatements exist in the financial statements. An auditor's opinion may also be called an accountant's opinion. Okay, so it's based on the audit of the procedures and records used to produce the statements and delivers an opinion as to whether the material misstatements exist in the financial statements. So again, this whole thing is about financial statements. So procedures and records. Right? Procedures and records. used to produce statements and delivers an opinion. So whether the material misstatements exist in the financial statements, it's also called the accountant's opinion. This is presented in the auditor's report, and the report begins with an introductory section outlining the responsibility of the responsibility of management and the responsibility. Also, what's my job? What's your job? Right? That's important. The responsibility of management and the responsibility of the auditor. The second section identifies the financial statements on which the auditor's opinion is given. And the third section outlines it's supposed to be the auditor's opinion on the financial statements. And then if it's not found although it's not found in all audit reports, there's a fourth section which represents further explanation regarding a qualified opinion or an adverse opinion. So there might be something that we want to make a comment about, and that'll be theoretically in a fourth section. I looked at the first part of this. See, what does this say? It says responsibility of everybody. Now here, this starts with, we've audited the company balance sheets and related statements. So it lists what's being audited, fine. And then it gives the opinion, like in the second sentence. And here it says the opinion should be in the third section, but it's already in the second sentence, not even the next section. So it just says right off the bat, it says our opinion, the consolidated financial statements present fairly in all material respects the financial position of the company as of January 22, January 21, the results of the operation, cash flow for each fiscal year in the 3-year period ending, and conform with U.S. So it conforms with U.S. generally accepted accounting principles. And then the standards that are followed. It says KPMG followed the standards of the Public Accounting Oversight Board in the U.S. and the internal controls over financial reporting based on the Treadway Commission. And the report dated March 23rd expresses an unqualified opinion on the effectiveness of the company's internal controls. So it gives both. It says, we agree with the numbers and we agree with the process that we got to the numbers by. And here's where the responsibilities are. It says these consolidated financial statements are responsibility of the company's management. The firm KPMG's responsibility is to express the opinion on the consolidated financial statements based on the audits. KPMG is a public accounting firm registered with the PCAB, that's Public Accounting Oversight Board, and required to be independent with respect to the company in accordance with the U.S. federal securities laws and applicable rules and regulations of the Securities and Exchange Commission and the PCAOB. Okay, so again, the audits were conducted within the standards of the PCAOB, and the standards require that we plan and perform the audit to obtain reasonable assurances about whether the consolidated financials are free of material misstatements, whether due to error or fraud. And our audits include performing procedures to assess the risks of material misstatements of the consolidated financial statements, whether due to error or fraud, performing procedures that respond to those risks, such as procedures including examining on a test basis evidence regarding the amounts and disclosure in the consolidated financial statements. Our audits also include evaluating the accounting principles used in the significant estimates made by managers, as well as evaluating the overall presentation consolidation of financial statements. And we believe that our audits proved a reasonable basis for our opinion. The last part of this is this is like the fourth, what's supposed to be the fourth paragraph. It's critical audit matter. But again, we're looking through this though, and so okay, we had the responsibility of management, responsibility of the firm. Okay, the standards, financial statements on which the second identifies that the financial statements. I'm saying what was audited, and the third one is the opinion. And then the fourth one is, this is the fourth one here. Critical audit matter is really the fourth one. Okay. So audit begins with the introductory section, responsibility management, fine. And identify financial statements, okay. And then then you give the opinion. And then what standards you followed has to also be in there. Okay. So the opinion can be unqualified in accordance with GAAP, a qualified opinion, or an adverse opinion. And then the other one is the the disclaimer opinion. Disclaimer is the event the auditor is unable to complete the audit due to absence of financial records or insufficient cooperation, the auditor issues a disclaimer. So I didn't stick around long enough, but that's what I saw. That's what I would have given, or an adverse one, that it was just very poorly. The internal controls are just very poor. This is referred to as scope of limitation and is indication that no opinion over the financial statements was able to be determined. A disclaimer opinion is not in and of itself an opinion. Okay. The adverse opinion is most unfavorable opinion business may receive. Indicates financial records are not in accordance with GAAP and contain gross material and pervasive misstatements. An adverse opinion may be an indicator of fraud. Investors, lenders, and other financial institutions do not typically accept financial statements with adverse opinions as a part of their debt covenants. And we're not going to lend to somebody where there's massive questions about how accurate these numbers are. And a qualified opinion may be given due to either limitations in the scope of the audit, or accounting methods that did not follow GAAP. However, the deviation is not pervasive and doesn't misstate the position of the company. In other words, there might be some things we need to clean up, but nothing major. So qualified opinions is when a company's financial records have not followed GAAP in all financial transactions. Although the wording of the qualified opinion is very similar to an unqualified opinion, the auditor provides an additional paragraph, including deviations in the financial statements, and points out why the audit report is not unqualified. But the unqualified one is the cleanest one. Right, an unqualified opinion is if the financial statements are presumed to be free from material misstatements, and the addition to an unqualified opinion is given over the internal controls of an entity if management has claimed responsibility for the establishment, maintenance, and the auditor has performed field work to test its effectiveness. Yeah, the standard stuff was up here, right? We were looking at standards. Okay, what the standards were. So the standard, right? The Treasury Commission and the Public Company Accounting Oversight Board. Those were the standards that were looked at. That was from the previous section, right? That was from the audit definition section. So there's your 4 orders: opinions, unqualified, qualified, adverse, and then the disclaimer. Now with the auditor's report, which is next, actually looking at this. So what are we doing here? So we did 1, 2. Here's number. That was for number 3. The 4 types of auditor opinions. That was number 3. And now we're going to hit the report, which is number 4. Is a written letter from the auditor containing their opinion on whether a company's financial statements comply with generally accepted accounting principles and are free from material misstatement. An independent and external audit report is typically published with the company's annual report, which is what you're seeing at Home Depot, and the KPMG documents. And the auditor's report is important because banks and creditors require an audit of the company's financial statements before lending them any money. And there was I was looking through Home Depot's AKs. There were all sorts of loans that were happening as the years unfolding. It's not just okay, we'll do everything in January and then report it the next year, whatever it might be, or report it in time for our annual report. It's just the debt is raised as it's needed. The auditor's report is a document containing the auditor's opinion on whether the financial statements comply with GAAP and are free from material misstatements. The audit report is important because banks, creditors, and regulators require an audit of a company's financial statements. A clean audit report means a company followed accounting standards, while an unqualified report means there might be some mistakes. An adverse report means the financial statements might have had discrepancies, misrepresentations, and didn't adhere to GAAP. Okay, and this is we're going to go through how this thing works. So what were actually, what might be better? Here, this is answers. So like this. So we're up to number 4 now. Okay, question number 4. And we're going to repeat a lot of this stuff too. Yeah, so it's a written letter attached to the company's financial statements. It expresses an opinion on the compliance, and like I said, here's the opinions right here. It says, in our opinion. Okay, so there you go, in our opinion. All right. On a company's compliance with standard accounting practices, the report is required to be filed with public companies' financial statements. Again, according to the SEC, and remember the SEC was in compliance with the 1934 Securities and Exchange Act. The auditor's report is not an evaluation. These audit reports, it's not saying this Home Depot is a good investment or a bad investment. It's saying what they're reporting is complies with the standards of the profession of accounting is what they're saying. They're not saying this is not an investment advice or anything, or a recommendation for a portfolio or anything like that. The audit report is not an analysis of the company's earnings performance for the period. Instead, the report is merely a measure of the reliability of the financial statements. The components of the report: there's an auditor's letter, follows a standard format, is established by generally accepted auditing standards, and usually has 3 paragraphs. So I don't know if there's really 1, 2, 3. I don't know. It's not. I wouldn't say it's got the pieces, but they're sort of moved a bit. The first paragraph states the responsibility of the auditor and the directors. Well, that we have that here. It says somewhere. It says it. Actually, it's here. All right. These are the responsibility of the company's management. the auditing firm's responsibility to express an opinion on the consolidated statements based on the audit. That's it. That there's so there's a responsibility. That's number one. The scope is next. The standards and accounting practices. And so what was the guide? So here's this one: Public Accounting Oversight Board, and then the Treadway Commission for the internal controls, Treadway Commission, which is in here someplace. And so, but the number one thing is the Public Accounting Oversight Board, independent, respective companies in accordance U.S. federal securities law, applicable rules and regulations of the SEC and the PCAOB. Okay, we have that one. Yeah, here's the Treadway Commission one is up here. So what the standards are: PCAOB for financial statements, and then the Treadway Commission for internal control. And then it says the third paragraph, but the opinion's offered on like the second sentence. It says, in our opinion, right, the financial statements present fairly. Okay, so like I said, so we're going through the theory here, and then you can look at an actual, a real one. Additional paragraphs may inform the investor of the results of the separate audit on another function of the entity. The investors will key in on third paragraph where the opinion is stated. But it's such a brief letter. There's nothing preventing you from reading it all. The type of I never commented on the audit letter in when I was at Value. Never, because it was, number one, they were all unqualified. They're all clean opinions. At least the companies I was studying. The type of report will be dependent on the findings by the auditor. Below are the most common types of reports issued for companies. There's a clean version, which we discussed already. Free from material misstatements, conform to the guidelines set aside by GAAP, and the majority of audits are ended unqualified or clean opinions. This one, the qualified opinion, is the financial statements contain some misstatements, but they're not pervasive, and the auditor is unable to obtain sufficient appropriate audit evidence on which to base an opinion. The possible effect of any material misstatements is not pervasive, and for example, a mistake might have been made in calculating operating expense or profit. So the auditors typically state the specific reasons and the areas where the issues are present, so the company can fix them. Now, certainly, Home Depot and all the Dow Jones companies, they have teams of internal lawyers and proofreaders and accountants. They're going to look at this and say, hey, is this all okay? So I'm sure it's internally edited or certainly proofread before it even gets to KPMG. And then KPMG does it again. So the adverse opinion means the auditor has obtained sufficient audit evidence and concludes that the misstatements in the financial statements are both material and pervasive, and it's a the worst possible outcome for a company and can have a lasting impact and legal ramifications if not corrected. Okay, it says regulators and investors will reject a company's financial statements following an adverse opinion from an auditor. Also, if illegal activity exists, corporate officers might face criminal charges. A disclaimer of an opinion means that for some reason the auditor is unable to obtain sufficient audit evidence on which to base the opinion, and the possible effects of the financial statements of undetected misstatements, if any, could both material and pervasive. Examples can include when auditor can't be impartial or wasn't allowed to access certain. So it would be a disclaimer, in my opinion, that the firm I work for would have had something like that. This is a Deloitte audit report for Starbucks. I mean, we didn't look at Starbucks or whatever, but it just gives an example here. And it just stops at 2 paragraphs, which is kind of weird. So it says we've audited the consolidated balance sheets, and there's the dates and everything else, statement of earnings. And these are what you learn in paralegal school, what you learn in law school is these forms are boilerplate, and you just put Starbucks in, you put Home Depot in, you change the dates, but it's going to be comprehensive income. It's going to be equity. It's almost, you read this, it's almost identical to this one, right? They're nearly identical. Yeah, we have audited, and you even use accompanying, so you can see it's identical. And this says, in our opinion, the second sentence presents fairly on material respects. In our opinion, fairly on material respects. So you're seeing that, right? And gives the dates, the results of operations, cash flow for the 3 years, and conform with accounting principles generally accepted in the United States or U.S. GAAP. Okay, fine. And again, the standards of the Public Accounting Oversight Board plan to perform the audit to obtain reasonable assurance. Standards Board. Okay, fine. Right. Here's plan to perform, which is right here. Audit to obtain. Reasonable assurance about whether. Yeah, reasonable assurance about whether. Yeah, so the same, right? Whether financial statements are free material statements, whether due to error or fraud, our audits include performing procedures to assess the risk of material statements, the financial statements, whether due to error or fraud, and perform procedures that respond to those risks. Yeah, it's identical set. So these are everyone has this. Test basis, evidence regarding the amounts and disclosures. All audits are include evaluating the accounting principles used in significant estimates made by management, as well as evaluating the overall presentation of financial statements. We believe our audits provide a reasonable basis for our opinion. We believe our raise. So there, we already read this. Okay. Next one. So that was 4, and now it says, create the list of the 10 standards represented by generally accepted auditing standards. And there's 3 here, 3 there, no, 3 here, 3 and 4. Standards of reporting, standards of field work, and general standards. Okay. So similar sounding to GAAP, this is generally accepted auditing standards or set of systematic guidelines used by auditors when conducting audits on companies' financial records, helps ensure the accuracy, consistency, and verifiability of auditors' actions and reports. The Auditing Standards Board of the American Institute of Certified Public Accountants created, GAAS, if you want to say GAAS or GAAS, right? Generally accepted auditing standards. The auditing standards help measure the quality of audits. Auditors review and report on the financial records of companies according to the generally accepted auditing standards. Their task is to determine whether the financial statements of public companies follow generally accepted accounting principles, how you recognize earnings, how you recognize revenues, how you recognize expenses, and then everything else how you recognize your tax work, all that. All right, it's a set of accounting standards that companies must follow when reporting their financial statements. Auditors review companies' financial numbers and accounting practices to ensure they're consistent with GAAP. The SEC requires the financial statements of public companies are examined by external independent auditors. Okay, GAAP outlines the accounting standards that companies must follow, and GAAS provides the auditing standards that auditors must follow. This is the companies to follow, and this is what the auditors have to follow. All right, this is the companies, and this is the auditors. These are a set of principles for reviewing the company's financial statements, ensure the accuracy, consistency, and verifiability of auditors' actions and reports, and are contained within 3 sections that cover general standards, field work, and reporting. So yeah, so it's general standards, field work, and reporting. There's a list of 10 standards and divided into 3 sections. So this is what I wanted you guys to list. These three, and those 4. That's it. And 6 is what's the what is the Auditing Standards Board? What is that? Yeah, and this stuff, this is probably maybe so. Actually, this may be a good number 6. I might 1 to 6 might be good. That we sort of cover that here, because 7 is the auditor's opinion, and what is it based on? What does it test? What does it evaluate? So that might be a good spot for another. So we might just go up to order, just deal sort of the first 6 today. So general standards have adequate technical training and proficiency to perform the audit. So you get your car fixed, you want the guy to know how to fix your car, right? The auditor must maintain independence and mental attitude in all matters. So it's not, you don't have some emotional, which again, on paper, that sounds good, but in the world, it happens quite often. And the auditor must exercise due professional care in the performance of the audit and preparation of the auditor's report. So, yeah, again, we all wish that this was always what happened, but people are people, and people are getting big fees, and especially in local governments, this stuff really can go out the window. But in the field work, plan the work, properly supervise any assistants. The auditor must maintain sufficient understanding of the entity, and so understand, you have experience in energy companies, have experience in technology companies, have experience in whatever it is the companies and you're not auditing all sorts of different companies, banking or whatever. You're probably sticking to a certain industry, including internal controls to assess the risk of material misstatements of the financial statements, whether due to error, fraud, and to design the nature, timing, and extent of further audit procedures. Must obtain sufficient appropriate audit evidence by performing audit procedures to afford a reasonable basis for an ongoing opinion for basis for an opinion regarding financial statements under audit. And the standards of, so this is the standards of field work. This is the general standards, and then the reporting standards. The auditor must state in the auditor's report whether financial statements are presented in accordance with GAAP, and the auditor's report must report the circumstances in which such principles have not been consistently observed in the current period in relation to the preceding period, and the auditor determines the informative disclosures of the financial statements are not reasonably adequate, and the auditor must so state in the auditor's report. And then the auditor must report or either express an opinion regarding the financial statements taken as a whole, or state an opinion cannot be expressed. When the auditor cannot express an overall opinion, the auditor should state the reasons why in the report. In all cases, the auditor's name is associated with the financial statements. The auditor should clearly indicate the character of the auditor's work, if any, and the degree of responsibility the auditor is taking in the auditor's report. Okay, so that's it. So, and again, these are all easy. Now, your version, everything isn't highlighted, right? Because I want you to read through, but it's all in here. So yeah, so we're going to do auditing standards board, and then we'll click off until the next week. You can see it's all here. Right here's generally accepted auditing standards, and actually that these should be bolded if they're not. I just noticed that. And we'll talk a little bit about going concern and maybe the last video, even though there's no direct questions on that. What corporate governance is, you got to be able to keep things together, and a lot of this stuff helps you do that. Now I'm going to go back, and so I'm just making a PDF out of this. I'm going to go back and I'm going to repost this with the bolded out pieces. So, okay, so this was the generally accepted auditing standards, and then the last piece. I think that this question is just simply, what is this? It's one of those. It issues guidelines and rule pronouncements that certified public accounting firms must adhere to in audits and attestations. Audits, your attesting means that you're stating what you did, and it's saying, hey, we studied these numbers, and this is what we believe. That's basically what you're signing off on it. Basically, part of the American Institute for Certified Public Accountants and the Auditing Standards Board mission is to serve the public interest by developing, updating, communicating comprehensive standards and practice guidance for CPAs. So it's standards and practice guidance is really what it is. Guidance, a set of principles known as generally accepted auditing standards, are formulated, revised, and interpreted by the ASB to ensure CPA practitioners provide high quality, objective audit and attestation services to non-issuers in an effective and efficient manner. Okay. Issues auditing, attestation, quality control statements, standards, and guidance to certified to CPAs. A senior technical committee is responsible for establishing generally accepted auditing standards for non-public companies. So there's something else, okay, of that. There's another version of that for non-public companies. The board is made up of 19 members representing various segments of the accounting industry. For any rules or pronouncements to be approved, ASB members must vote on them and reach a 2/3 approval. It's a senior. The ASB is a senior technical committee of the AIPCA, the foremost professional organization of CPAs in the United States. Has issued guidance to accountants and auditors since 1927. It created the Auditing Standards Board in 1978 to replace a previous technical committee, making the highest authority in establishing auditing standards in the United States. Okay, which is really what this is about. It's responsible for auditing, attestation, quality control, reporting, performance monitoring. It exists to improve existing and enable new audit and attestation services, establishing the rules that accountants, professionals responsible for keeping or inspecting financial accounts are supposed to abide by. Up until the early 21st century, the ASB was a premier authority to the generally accepted accounting auditing standards. That hierarchy was then altered following the introduction of Sarbanes-Oxley. That legislation, which passed to protect investors from fraudulent financial reporting corporations, put the ASB in control of standards and guidance to CPAs for non-public company audits. Okay, so that's basically what that's Auditing Standards Board. Okay, so again, you're breaking up sort of the pieces here. All right. So these guys are in charge, or, control standards and guidance to CPAs for non-public company audits. It was the premier previous to Sarbanes-Oxley, and certainly just reading between the lines, obviously, if Enron and all these other catastrophic financial reporting events happened, Auditing Standards Board wasn't doing what it needed to do. Okay, so I'm sure if you're a part of these committees, you work in the field or you work in the industry, you know people who are in the industry, and it becomes it's a very difficult thing to sort of manage your interests, the public's interests, conflicts of interest, all those other kinds of things. Yeah, the Auditing Standards Board issues the state issues quality. I'm saying issues standards guidance. For CPAs doing these audits, but apparently they have some sort of authority over the the non-public company piece of that, right? So here it is. Yeah, it's the Public Accounting Oversight Board, together with the SEC, have final authority over public companies. That's how it's split. So the Auditing Standards Board is for non-public company audits, and now what comes out of the Public Company Accounting Oversight Board is just it mirrored Auditing Standards Board. So I probably should have had this definition. I don't have the SEC, but again, I had to draw the line someplace, right? So the Auditing Standards Board governs non-public company audits, while the Public Company Accounting Oversight Board and the Securities and Exchange Commission set the guidelines for audits prepared by public companies that trade on the stock market. Okay, there's a rulemaking process. And there's certainly discussions with the AICPA, and they may involve the public. Its periodic meetings include discussions of auditing issues, preparation of public statements, and might also include some public hearings. For any rules or pronounced to be approved, the Auditing Standards Board members must vote on them and reach a 2/3 approval threshold. At some point, at that point, they may produce a draft proposal for the final rule. Okay. It publicizes its pronouncements in a letter and by way of website. There's membership structure to these things, right? There's 19 members. Each is nominated by the director of the CPA Audit and Taxation Standards staff. Each nominee must be approved by the AICPA Board of Directors. Okay. It's diverse, all that other stuff, right? Big Four accounting firms are involved. Local accounting firms that are not associated with the Big Four. There's a lot of those in the New York City area. National Association for State Board of Accountancy representative, various other public accountants that are AICPA members of private practitioners such as academics, government employees, auditors, and other public officials. Okay. All right. So so we went up to internal controls. Actually, what I'm going to do here, if you guys don't mind. We have these left for tomorrow. I'm just going to, for the time being, I'm just going to make those red, just to remind us. Okay. So tomorrow we're going to go over, and actually we went over we're going to pick up at 7. So we talked about the auditing standards board that we did. And yeah, it'll be good to sort of, repeat some things tomorrow. We're going to do a little bit of repeating. So we'll look at 7, and we'll specifically go back and sort of do some of these answers, but we'll specifically go into 7 and so 8, and how to find some of this stuff again. Okay. But that for tonight, I think that was good. So this is a good first step, and we'll make one of these tomorrow. Yeah, we'll make one of these tomorrow, and we'll pick it up then. So see you then.